Good day, everyone. Well, we've got the market chopping back and forth. The Nasdaq has tried 3 times now to make an earnest run for new highs in the form of a persistent uptrend, but that is yet to be seen. We've got the S&P and the Dow that are dragging along. There's a bit of some dissonance between these averages. Since the S&P and Dow are lagging, S&P is still under its 50-day right now as we speak, and essentially you got a lot of churning going on because the markets are having an argument about whether, first of all, the tightening is going to happen sooner or later. Meanwhile, you've got the QE effect, which creates shallow floors on these markets, and then you have ongoing bubbles that are getting bigger, and right now the market's dealing with the issue at Deutsche Bank. That stock has fallen more than 90% off its major highs. I know the stories always say it's fallen more than 50% in a year's time, which is true, but if you look at the all-time high, which it achieved back in 2007 before the great financial debacle of 2008, it's more than 90% off its peak, and it seems like it's getting worse. So this downtrend is very much intact. If you look at what it's done this year alone, it's a very aggressive downtrend, and right now it seems like more of these issues are starting to crop up with these hedge funds that are now covering their positions, and the U.S. Justice Department going after the bank for $14 billion, and the derivatives issue, although I think that's less of an issue now than it was certainly in 2008. But nevertheless, Deutsche Bank is one of the big guns in finance. So it's psychologically perhaps the most deleterious argument one could say is psychologically it's not good to see such a major bank come under fire as Deutsche Bank is, and price pretty much says it all. I mean, it's well under the lows of 2000. The lows it were achieved in 2000 and actually very early 2009, and those lows were about 21 and change. And right now, it's almost down half from that level. So price volume tells you everything you need to know, and it's telling me that this bubble could get nasty. It could have a nasty effect on the market. So right now, you know, we always look at price volume of major stocks. That tells you what to do in terms of stocks. The major indices are, of course, supported by QE, so they can bifurcate, and they can, you know, the Nasdaq is very close to hitting new highs once again. And if the the Deutsche Bank issue settles down, then it wouldn't be surprising to see the QE effect take over once again, and for these averages to stumble into new high territory. I guess stumble is probably the best word I'd use, because we certainly aren't getting proper lasting uptrends in this kind of environment. Yeah, we had the Brexit, post-Brexit, we did get a nice uptrend. The VIX volatility model, both of the models were sitting on buy signals, or rather signals that implied that the market would go higher. And right now, the markets, like I said, have a lot of riptides to contend with. We've had a number of good names that have pulled back. This market has a nice rhythm, ebb and flow to it. So basically, it takes 2 steps forward and then 1.5 steps back. But when it takes the 2 steps forward, the best stocks out there, as we've cited in reports like TWLO and LN, etc., they will take 7 steps forward. And that's where you, in context with the chart, you can start taking profits, take partial or full profits, and then when the market falls back in, these stocks often get pulled back along with it, and often will pull back to natural support points, such as their 10 or 20-day moving averages. So if you can keep in that rhythm, and I've mentioned this before, but 2014 was a great year for that had that kind of rhythm going for it. 2015 was a harder year. That was a very tough year in general. But if you can maintain that kind of ebb and flow with your own accounts, then you can do very well in these kinds of conditions. So yeah, today we're, like always, we're going to go back through some of the more salient names on the list. Gil probably will go through each one, and then I'll chime in if I have anything to contribute. And as far as gold and silver and commodities, we know that OPEC is going to put a restriction on its production output, so oil has been rallying on that news. Gold right now is getting very quiet. Once again, it's pulled back, and I like to see quiet volume days. GLD is the ETF for gold, and you can often use that as a clue as a possible buy point. These things tend to gap up and down, mini gap up and down, that is, in their pattern. So sometimes if it gets really quiet in there, you just maybe start buying it. If you buy these things on the first day of strength, sometimes it's even too late, especially if you're playing something aggressive like JNUG, because that thing will gap up or down several percent at market opens. So at any rate, and I'm just looking at GDX right now. GDX volume right now is minus 43%. So again, it looks like another quiet day. So I've been monitoring this. I'd like to ideally see it repeat a pattern where it basically retests lows, recent lows that is, on very quiet volume, and then I might take a nibble at that level, because it's done it a number of times in its pattern since gold started its uptrend at the beginning of this year. And so these quiet days, and you have a number of them with a constructive pattern leading up to that quiet day, or days rather, can be your entry point into GLD, SLV, any of these instruments. With that, I will turn it over to Gil, so we can go through the focus list and other matters.
I think you've got end of the quarter today, so there's some propping going on, but also something of a relief rally as a result of the assumption that Deutsche Bank will be bailed out one way or another. There's also talk this morning, I don't know if you saw that, Dr. K, but Janet Yellen talking about buying stocks. The Fed could start buying stocks and corporate bonds and all kinds of stuff.
Right.
I have some old office furniture. I was thinking if they wanted to buy that and put it on their balance sheet, that's another way they could inject capital.
Hey, those are hard assets. Those are hard assets, so they should do well.
Like I have a mahogany bookshelf that's actually very hard, and so hardwood. Anyways, so, they're just going to print forever. So I think for the most part, you're getting a reaction rally here that makes sense given the end of the month. But it also shows why I think you need to focus on what the stocks are doing. Yesterday I actually was long the UVXY just for a day trade, and it was a pretty good scalp. But in my view, it wasn't clear to me whether we're heading for another big sell-off like we were in September, October of 2008. So if you look at the NASDAQ index, it's having trouble breaking out. You can see that, but in the process, it's sort of just moving sideways. So this is a bull flag, so you can't really look at it any other way. So if I was going to pick on things on the short side, I generally go after individual stocks on their own merits. Otherwise, I'm also looking at longs. So one of my better longs over the last couple of days has been something like AMBA, which I think is moving because Qualcomm bought or is buying out NXP Semiconductors, which I thought was interesting because NXP already bought out. Who did they buy out? They bought somebody else out, didn't they? Do you remember who that was? Anybody remember? I have one person saying no sound. Can everybody hear us okay? Yeah, NXP, I bought Freescale. That's right, thank you. And so so they were already a merged entity, and now they're merging with Qualcomm or getting swallowed up by Qualcomm. Don't be surprised if Intel perhaps comes in and starts buying somebody. But my approach when the market looks like this and it starts getting really funky, where you just start chopping around, I'll go into a bifurcated approach, meaning I'll be short and long, and I'm hanging up right around my highs for the year, less than about 0.5%. below, so I've been able to hold my drawdowns pretty tightly and just work my way higher. But it's not like it's easy. So I mean, anybody who's in this market knows that you'll have days like yesterday where a lot of questions are raised in your mind because you don't know whether the market's going to get worse, or is this the beginning of a crisis and I'm going to wake up tomorrow and the Dow's gapping down 1,000 points and I'm losing, a huge amount of money. So it can rack your nerves. But I think the key is probably just to maintain smaller positions, which is what I do. I don't go hog wild. And a lot of times I will just work stocks on a daily basis. So in other words, I don't necessarily have to buy them and hold them. I'm willing to trade them on a day trading basis, catch the move on the day, maybe sell, and then the next day, if the move looks to be continuing or the stock's hanging around where I unloaded it, I may come back on top of it and keep riding it. So just give you an example. Here's an AMBA. This thing had a pocket pivot yesterday. I don't think we have it on our list, but you can see there was I think it just barely cleared a pocket pivot, and just from a point just above the 10-day moving average. Now you're breaking out. So this has really been an amazing bottom fishing type name, and we've discussed it many times over the last several months in the webinars. But you can see it's coming up the right side of a big punch bowl type pattern, but this stock's acting pretty well. But it's not on our list, but that one's definitely one that I've been playing and is acting pretty well. So if you look at some of the other, I like to call them the big three IPOs: Acacia, Twilio, and Line. You can see Acacia, they're on Monday, of course, they announced the secondary offering, $450 million worth. $325 million of that is coming from selling shareholders. So in other words, insiders. What is that? 325 million is how many shares, Dr. K? At about 100, like 325 or 3.25 million? Yeah, that's.
Sorry, say that again?
$325 million worth of stock is about 3.2 million shares, right? Yeah. Anyways.
Yeah, something like that.
So I'm, looking at the pattern. If we just take away the noise about regarding the secondary, and I think this is how you want to be looking at stocks. You don't want to be getting too caught up and freaked out by the news. My approach on this thing recently was buy it along the 20-day line and sell into the rallies and then buy back at the 20-day line. That worked a couple of times. I sold this final time near 120, and then of course they gap it down on Monday, which I would not want to have to be sitting through. But if I was long the stock, probably just get rid of it, because you don't know where it's going to stop. And there's also logical places for it to descend before it starts to stabilize. So in this case, you can see these lows over here. Everybody can see this chart okay, right? Just want to make sure. But if you take these lows here, you've got these lows come into play, and then the low down here at the 100 level comes into play. So I think, let me check this. If we look at the low here would have been 103.01, and then the low here is 128. So here we get down as low as 99.99. So you undercut all these lows. So that, in my view, sets up a logical place for the stock to stabilize and then potentially try to move out of the space, because all it's doing is forming a base. If we look at it on a weekly chart, what do you got? You got this big high tight flag, which I don't pay attention to trying to put a label on a stock's pattern, but that's what it looks like. That's not too bad. Okay, you do have some higher volume weeks, but I won't get too bogged down in that. I've seen a lot of patterns on the weekly chart where you have higher down volume weeks in the pattern relative to up volume weeks, but it still breaks out and goes higher. So I think in this case you're in a logical position on an undercut and rally, and your stop here is obviously the low here, which I guess would be what, 100.28, or you could use the low at 99.99. That only puts you a few percent. I'd say from here about 5-6%, which is totally doable. But I'd like to see what the pricing of the secondary is. We haven't seen that, right, Dr. K? No.
Not to my knowledge, not yet.
Okay. I like the way
unless they came out with it today. But,
yeah,
I don't
they're
believe so.
supposed to come out with it, I think, Wednesday, and it still hasn't come out. I don't know if that's a good sign or not, but we'll find out. Just wait to see what it does when it comes out. But so far you can see that from a purely technical perspective, it's sort of doing normal stuff. It's not abnormal, okay? So I'm not going to sit here and tell you that this is bad, terrible action necessarily. It's building a base, and things had a hell of a run already, so it's entitled to do that. And I think what that does eventually is to help build a bigger move. So, and I'm open to whatever this thing wants to do. I don't come from a bullish or bearish perspective, and I never really consider myself to be bullish or bearish. I see bullish and bearish setups in individual stocks, and I operate on that basis alone. And it helps to simplify the process a great deal. So I highly suggest that you guys think about looking at these indexes less and watching the stocks. Because even though the market came off hard yesterday, and there were some spots where you could make some short money, I did, and but you saw a lot of these stocks, really, if you look at Acacia, which had already been hit, yesterday it didn't do too much. You know, if we look at Twilio, it's broken out of a base. I don't trust it here. I'd look for a pullback into the 10-day line myself. So buying down here on the Voodoo pullback, for those of you who recognize it, is right here, this particular, right here. It doesn't look all that great. Notice how it opens higher than it closes, and then the volume dries up, and it's, I think, the lowest volume in the pattern other than this day, and that was just before another move up. And so this is where you can buy it, you know, and then you get this trend line breakout on what is essentially a 5-day pocket pivot, and you had a couple in the pattern at that point, and so I felt that was valid. Now you'd want to see a pullback into the 10 days to take you roughly to the top of the base. But if you notice, what did it do yesterday? It just held tight. It didn't. There's no out of control sell-off. So the leaders are holding up, and that may be a good thing. At the very least, it tells you that if you are position building these stocks, which is not something I do, but if you're taking a slower route and you're buying the pullback, you know, the undercut here, and then you buy a tight along the 10-day in here or something, and then the pullback into the 20-day, and you're adding in these points, and then here again, and you built your position that way, I think that's a smart way to do it. Coming into it for the first time here is a fool's game, in my view. It doesn't mean it won't work. I just think your risk of getting yanked back is higher. And if some of this Deutsche Bank stuff starts to get funky, then that could happen. So, you know, you want to be ready for anything. And the best way to do that, in my view, is to buy into constructive strength. And you do it, you know, quietly and assiduously, and then when it runs up, you sell into that. So when the market's running up, I'm actually raising cash rather than averaging up on my positions. So that works for me in this particular environment, and anybody, I think, who's been operating in this environment knows that it can get pretty funky. And the fact that the NASDAQ has failed on 3 breakout attempts before shows you just how funky things can get at times, okay? Anyways, the other one is line, LN. I think this one's acting fine. I mean, this is pulled in here to the low. This was a viable gap up, right, Dr. K? Is that right?
Yeah, I mean, it technically met all the criteria, although, of course, we talked about it when it was quiet and doing a voodoo day before, you know, and then it had that initial pocket pivot out of the, after the voodoo period. So hopefully some people got in, you know, before it really took off, because there was an opening opportunity there. And then, of course, we mentioned that it really started to get ahead of itself price-wise, as demonstrated 3 days ago.
Yeah, and then you could sell into that. But I think if you look at this, you had, I think I pointed this out last week, you undercut this low here. Right here. So this sets up, once you rally back above that low, okay, using my very simple undercut and rally setup rules, once it comes back above that low, you can come after the stock. Now, it didn't hold the first day on this particular day. Let's make this bigger. Let me clean this up so I can show you guys exactly what I'm talking about. So let's see, make this chart a lot bigger. So what you see here is, I also don't like this color. It looks too much like the 20-day moving average. Let's see, what would work here? Purple? Let's see, how's that? Whoops. Yeah, we'll try that. Anyways, here's a low here, and you notice on this particular day here, it tries to rally, but in fact it gaps above it, but fails. But so you could have tested it there initially, but it might have pushed you out. That's how I'll handle it, okay? And then if it goes back above that low, I'll come back after it. So I'm trying to keep my losses to within just a couple, 3 dimes, okay, around that price level, that prior low, which in this case would have been, let's see. I wish there was a way to more quickly flip back and forth from that silly pen. But anyways, the low here is 43.16. So here you opened above it at 43.42. So if you bought it there, you're only about 24 cents away. Of quarter point. So if it flips out on you, you just bail. And now you come back the next day and it actually moves above that low and closes at 43.37. Now again, that low is 43.16. So it's not a killer if it doesn't work out. So and you know you're coming in and you're out the next day because it doesn't quite work out. And then the third day here after this breakdown, or is that the second day, whatever, the first blue bar here, you see that you could come back into it. And then the next day it gaps above the 10-day. And it looks a little bit funky as it runs into some resistance. But if you think about this, this is on... what's the volume? The volume's pretty decent here. So it looks like it's running into trouble, but actually it does come into the 10-day line, which makes it puts it in a low risk buy position because you're still at 44 bucks and you're using the 43.16 low as your stop. So that's not, you know, it's less than 2%. So it's very manageable, but you also have to look at the chart and understand that the reason it stalled up here is because it pushed against these prior highs. Okay, and then it gives you one more chance here on this day, and then boom, we're off to the races. And I didn't see any news to account for any of that. Did you, Dr. K?
No, I don't believe so.
All right, so
Seemed
now
like
this
just a technical
becomes
reaction.
a viable gap up, and you could use, what's the low on this thing? This low is 48.20. So now you notice it flips just below it here yesterday, 48 bucks, 20 cents. So you could allow for a little bit of porosity, I think, of maybe 1% or 2 max below that low. And use that. You're buying the viable gap up. So, and I think the pullback becomes viable. So I actually buy this pullback in here this morning. So, and as long as it holds 48, I think I'm good. Now it could pull in and yank into the 10-day line, but by the time that happens, the 10-day line may be back up closer to 48. So I would buy the viable gap up because I think that gives you a very tight reference point. I wouldn't be buying it on the basis of being a breakout and then I'm going to use 7 to 8% on the downside. I'd like to keep things a lot tighter than that, okay? So anyways, you guys get an idea here? Hopefully this gives some insight into how I look at things or how we look at things on a daily basis, focusing on the charts themselves. So let's go. We're going to go to the current. I believe this is a current magical VoSI focus list. And so we already looked at that. American Woodmark. I've been skeptical of building-related stocks mainly because the builders have been getting chopped up. And this one's kind of chopping around, but you notice it's in this sort of Louis position, or it's formed an L. You can see the L. It breaks down hard, so that looks ugly. So initial ugly action, then you hold tight along the 50-day moving average. Volume is drying up. You see that? So this might be what I call a Louis pattern where an L will suddenly turn into a U and head back up to the highs, and you'll see that a lot. I mean, if we go back and look at some of these names. Look at this. This just turned into a U. It's a mini Louis, I guess. But look at Ellie Mae. We took this off our list because of the violation of the 50-day and the fact that it had been on the list for a while and maybe was ready for a rest. And then the thing turns around and breaks out to new highs. That's so typical of this market. And you can get fixated on it and it'll drive you nuts if you want it to, but I don't really think it's anything you worry too much about. There's always plenty of names to play. Now, EBIX was another one, I believe. And this one, if you look at it, you got some support here. Did we take this one off? We did, right?
Yeah, we did.
Yeah, it could possibly go back.
Oh no, wait, hold on a second. Hold on a second.
Okay.
No, I think we left that one on.
It's not on the list.
It's in my. Was it in the most here? Was it on the most recent focus list?
A couple of weeks ago, maybe 2 weeks ago. But in any case, you notice how the thing is recovered.
Yeah, we took it off. We did take it off.
But see, that would have been around 54. It's at 56. Big deal. You know, what is that? A couple, 3%, 4%. It's back above the 50 line. It's holding tight. Volume is drying up. You saw a little pickup in volume yesterday, but nothing hectic. So I'm not sure what happened to my moving average of volume, but bear with me. I'm going to just go back to my chart. I need my data window in there. Okay, there we go. And that's what it's looking like, and that doesn't look too bad. So and notice here you have the break and then a tight action. In this case, the tight action occurs underneath the 50-day. Now, if you operate on the basis of what O'Neill teaches, when stocks start to live under the 50-day, that's trouble. In this market, they're just doing that to screw you up, basically, and make you think it's a bear flag. and then they just turn it back to the upside. And admittedly, this looks like garbage because it's getting hit with heavy volume. But this is the way this market operates. And I've met some traders rather, who don't even pay attention to volume. All they pay attention to is price. I'm wondering if that's where we start going, because if you think about it, sometimes the volume is just a bunch of algos going nuts on the day. You know, Dances with Algos, that's a new Kevin Costner movie. Dances with Algos, and that's basically what happens. And so that's all you're doing all the time. And so the action is that looks, say, as if it's moving either bullishly or bearishly away from the mean, goes the opposite direction. So when things look fairly ugly, they turn good, and when things look fairly, or they turn beautiful, and if things look beautiful, they turn ugly. So that's the kind of market you're dealing with. Here's Amazon, which has done pretty well, but notice again you have a similar situation. You have a Louis pattern. So the market's signature, the Louis pattern, in this nutso market, and you even see, you know, the indexes do the same thing. So, but anyways, this thing breaks out, so it looks very powerful, big volume, and then it gets knocked right back to the 50-day moving average. If you bought the breakout like a fool, as far as I'm concerned, you've been blown out of the position probably, and the place to buy it was when it forms the lower part of the L here and then turns into a U, breaks out. Now we get to the $800 price level. So those of you familiar with the Livermore century mark buy rule, that actually held up here. I know somebody got it in a tizzy because it pulled back below the $800 level. Someone on Twitter, I think it was. Because it pulled back below the $800 level, but it got to a low of $797.14. So 1% on Amazon at 800 is $8. So you got to give it at least that on the downside, I think, and maybe the top of this structure here. And I would actually look at that as potentially a viable pullback. But of course, it happened on Monday, which was a day that the market was looking ugly. So another thing about some of these pullbacks, or even this, they'll occur because this breakdown in Amazon occurred when the market started to break down off the peak. Back here, you see that? And so initially, you know, you're looking at that and you're saying, wow, that's ugly, and the market's breaking down, so oh my god, we're going into a correction, and you get shaken out of your position. If instead you're not buying breakouts and looking to buy on constructive weakness, then this Louis pattern might be something that can work for you, especially since you can just use the 50-day line as your guide for a downside stop and keep things very tight. Okay, that's the way I like to operate. So the one thing about EBIX, and somebody's pointing this out, is that if you put a 65-day moving average on here, you'll notice it holds. And I do actually use that in some of my charts. So here's one, and I actually have it on this chart. This might, whoops, sorry. I hate that gong sound. You get gonged for not handling things right. But here's what it looks like, and no, it never really violated the 50-day line per se, and if you had held that, I guess if this was the first close right here below the 50-day line, you could have held on that basis. So, and it also held the 65-day line, but what it was looking like was a bear flag, okay, and after the market had corrected, some of the less attractive looking names we wanted to bail out on, just to kind of take some things off the list. And if you think about it, EBIX hasn't really had a huge move. It's more or less been sideways. But you see how this market likes to fool you. Somebody says it's resistant at prior highs because traders will short at that point. Well, I think if somebody bought stock at the highs, like you even see it here, when this thing comes up, comes back up to the highs and pulls back a little bit. There's people who bought up there and they're thinking, oh my god, you know, I bought it up here and then it broke on me, and then now it's turning and I can get out even. So that's basically the idea of overhead resistance. Pretty simple concept. People who bought higher and saw it decline, they're just waiting to get out even once it comes back up. So anyways, let's keep going here, and we'll look at a Vago. Here's another one. This thing's busting in fact, here's a violation of the 50-day line on an intraday basis. It gaps below the this low of this day, so that's a violation, but it turns around and goes right back up. And now with Qualcomm buying NXPI, which is another supplier to Apple, it's starting to set up again. But notice how it just starts to look really ugly, and it actually violates. Here you had a clear violation because you closed below in this area here. Let me just put a pen on this here. You closed below the 50-day moving average here, and then you closed again here. So there was another violation. So it had two violations, one on an intraday basis, one on a closing basis, but it just turns around and goes to higher highs. So as Dana Carvey's character, when he did the little old lady, used to say, isn't that special? Maybe some of you could, oh, look at the purple lines stuck in there. Get those out of there. All right, here we go. Here's 3D Systems, kind of a, what I call this is a Teenage Mutant Ugly Duckling. No, Teenage Mutant Ninja Ugly Duckling, where it's a teenage stock and it's a former darling that's trying to recover. After just a brutal downtrend, and it's trying to recover and set up again, and you might say it's working out so far, and this just continues higher, and it didn't really care too much about what the market was doing yesterday as it held tight. Alibaba got tagged. Was there some news out there on these things, or somebody was questioning? I think, in fact, last night I had dinner with a couple of traders. One of them used to trade for Victor Niederhofer, and he was mentioning something to me about Alibaba being coming under some pressure because somebody was reassessing the numbers. But I think his general argument was that he looks at it as another Amazon, and so it will just continue over the longer term possibly to move higher. But the place to be buying it was back when we talked about, I think in these webinars, I talked about buying it down here in the 80 area, and then you had the Bible gap up, which you put a report out on that, and now it's continuing higher. And it's chopping around, but it's kind of up there, so that makes sense. I would definitely look at pullbacks to the 20-day line as buying opportunities. Biogen, the biotechs all got smacked yesterday. Biogen was one of them. Some of them got smacked worse than others. If you look at, say, Gilead, that's not looking too hot. Celgene. And these were all looking great a while ago, and they're getting blasted. But Biogen seems to be one of the better ones. Where did it go? Oh, there we go. New Oriental, here's another one. Look, see, here's where we actually kept this one on. And mainly because what I was seeing here is an undercut of this low, which I thought could set up an undercut and rally, and it eventually did, and the stock broke out to new highs. Of course, there's the breakout a couple of weeks ago, and that's all you get. So now it's basing, and maybe it's going to pull back, hold along the 20-day. This little biotech has been acting pretty well. It's quiet for a while. I think we picked up a pocket pivot in here somewhere, probably right here, back in late August. And it's gone tight sideways, and now it's punching out to higher highs. So that stock has done pretty well. Edwards Life Sciences is slow but steady, and broke out recently. It's trying to hold the breakout. Nothing special there. Facebook is like trying to figure out what it wants to do. But if you look at this pattern, it's just holding tight along the 20-day. It may take the earnings announcement. I think it's in October, right, Dr. K? When do they announce earnings? In October, late October?
I believe so. I mean, according to, well, this thing is not that accurate, but it's saying here early November.
I wouldn't pay attention.
November 4th.
I wouldn't pay attention to Wanda because they have.
I would go by the other metric. In
11/2. Yeah, second day. So, anyways, here we have GoPro is one that we've had on for a while, and it runs to the top of the range. Now it's actually holding on top of this range. Just another one of these Teenage Mutant Ninja Ugly Ducklings sitting here in the teenage price level, and it's trying to round out a low. Some of you might see an inverted head and shoulders, which not really a pattern I necessarily get excited about, but I do watch how the precise daily price volume action is taking, or unfolding rather, and so far you've broken out here and you're holding on top, volume's drawing up. That looks okay. I think drones are still a happening thing, and I think Ambarella proves that. So I was thinking that GoPro should come up with a drone camera that sits on top of a police squad car, and when the police pull someone over or whatever, they activate it, and it moves up to an altitude of maybe 50 feet, so it gets a nice big view of the so-called crime scene or arrest scene, whatever, and That might be a good thing to have. So somebody needs to come up with that. I got to patent that. Can you get on the patent office website? Dr. K will patent that idea. So maybe someone's already thought of it. Fabrinad, this one's funky. This is the one that breaks out and then breaks down, and it's just continuing higher, but it's holding tight. That looks fine. Gigamon had a pocket pivot. Oh, well, would you call that a pocket pivot on Tuesday, Dr. K? Did it?
On Tuesday, yeah, I mean, it's a pocket pivot off the 10-day, but it's, this is the kind of market where you don't want to be buying, I mean, relative to the price on this one. I mean, we were talking about it a couple weeks ago, and that was obviously a better, more favorable buy point.
Right.
Because now it's kind of, it's getting up there. It's getting a nosebleed level.
Yeah, you actually could have bought this, on the pullbacks in here. There are some pocket pivots within the base, and those were better buy points. Now, this breakout probably, it worked well because it had plenty of time to set up again in a new base, and that's probably why it worked when you don't see a lot of breakouts working. Glaucos is just hanging around. This thing broke out here a couple weeks ago, so probably the 20-day is where you look at it. We already looked at gold. Grub-a-dub-dub, that one acts okay, just moving along the 20-day line. So I think pullbacks to the 20 line are where you want to look at it. Intuitive Surgical broke out last week and hanging in there. Notice how during the sell-off yesterday it was actually up. So that's acting okay. Here's the line. We already looked at that. MercadoLibre. Notice how it breaks out, and if you buy the breakout, then it falls back into the top of the base. And now holds at the 20-day, so that's really your better low risk entry point. And I think you had a volume drop. Well, actually, notice how volume picks up right at the lows, right here. Classic, utterly classic. On this particular day, you see volume pick up, so that could scare you. And you see it busts in the 20-day and dropping below the gap up, filling the gap though. Fills this gap and turns back to new highs. And of course, once it breaks out to new highs, it drifts back in. So you're better off, selling into the higher highs and then maybe buying back on a pullback. That's what I like to do, and I do that quite frequently. And the way, you might say, well, how do you lose your position? Not really, because what I also do is I work on a short list of stocks, maybe 5 to 10 names max at any given time, and I'm just working those. So, if I was long, say, Twilio last week, Twilio and Acacia, and I sold Acacia, into this, and Twilio maybe into this, okay, then I'm not doing too bad because Twilio's just hanging around. I could have bought it back here, but Acacia got hit a lot worse. So on balance, when I look at all my positions and everything that I'm playing, it all works out. And so I would, even on this break to new highs, I'd be inclined to possibly sell this, look for a pullback to the 10-day. So that's pretty much how this market works. And MercadoLibre is very typical situation in that regard. Momo, I think, is in a viable position here. So on the weekly chart, you notice that it's coming out of this long base structure, 2-year base structure. If you go back and look at, say, Weibo, let's see, Weibo's wobble. You can see Weibo did a similar thing. Here's this base structure. And then it broke out here. And this is where I actually got interested in it. Once it got out of this structure and it sets up real tight in here, and it's pretty much, we actually put it on down here around 1820, but this thing's gone nuts and it's continuing to act well. It's one of the big leaders in this market, but one of the few that acts like this. So, but they're there. NetEase pulling into the 20-day, so that might make it viable. NVIDIA continuing higher. We see the pullback into the 50-day. It's where you wanted to buy it, and then you get a breakout here that stalls, but that's sort of a pocket pivot breakout nevertheless, and then you get another pocket pivot here on Tuesday. So you can actually see if, going through these stocks, that there's nothing really that wrong with most of these patterns. So Nevros continue to act well since we put it on in this base and just kind of sliding back and forth, and now moving out to new highs. Impinge, which is a nutso stock to play, it's very volatile. Bible at the 20-day. You notice he undercut this little low here, and that was enough to send it higher, but I'm guessing it's probably going to pull in and build a longer base. Square is another one of the Teenage Mutant Ninja Ugly Ducklings. It's last week or a couple weeks ago I talked about it being Bible at the 200-day line, which had just shown up on the daily chart, and now it gets back above that and pulling into the 10-day and 20-day line here with volume pretty low today. So that actually is in a viable position. And my suggestion, if you're afraid of what might happen over the weekend and you're using some of these pullbacks to buy stocks, just don't go in so heavy, you know. Or the other thing is if you want to hold some longs and have a small position in the UVXY. If something really goes nasty with the market over the weekend, that will help to hedge a little bit. Shutterstock holding tight along the 10-day after a breakout, so that's coming into a viable position. Team had this big move, and then it had another big move yesterday. And each time it gets sold into, it's like, what's going on here? I would just leave this name alone. What do you think, Dr. K?
Well, I think I think we put something out about Team about it's getting ahead of itself in the price several days ago, and that's it's a no-brainer to take some profits off the table when you see that kind of action.
This kind of move intraday. Yeah, if you see that, I mean, you could get excited and think they're going to get bought out, but I never saw any news on that. Did anybody see any news on that? Any of you out there?
I didn't see anything.
No, but you could have bought it back like 50-day and you would have got a nice little pop there. But this thing's, I don't know, it's too weird for me right now. Tail end, I would be watching. Yeah,
well, I think the way it trades, I would probably avoid it at this point because it's now sloppy in the pattern.
Maybe watch tail end and or tail end. I don't know what they tail end. I don't know, whatever. It's a French company, but it's forming the lows of what might be a base, and maybe it's ready to turn out of here. So we'll see. I probably wouldn't hold my breath. You had a pocket pivot on Monday, and that was in the middle of the market selling off, but then that failed, so now you're back to testing the lows. I guess if you think this has a shot, you could buy it here using the lows as a tight selling guide. We talked about Twilio, Ubiquity Networks, and that's not going anywhere, but it's hanging in there okay. I like, I would focus on some of these bigger recent IPOs, the Acacia, the Twilio, the Line, and the ones that have acted stronger because they're already showing themselves to be leaders. Viva is tight along the 10-day and 20-day, and volume's drying up. VoSI is the improbable little engine that could, but sometimes it can't, and the past couple of days it's a thin little stock, so it gets funky with the market and pulls back. But this is kind of a spec name, speculative, so we looked at Weibo, and that's pulling in again. I think, see, you notice how this breakout doesn't work, and it might be because it's not long enough, coming out of a long enough base, and this is a pocket pivot, but it might be coming into a viable spot here. So you might, look at that as a possible idea. Wix.com. These guys are like GoDaddy a little bit, I think. They help people build websites. GoDaddy is some variation of that, so they might be cousin stocks to some extent, but it's not. Here it had another funky move, and it looks like trouble here. I don't know. I think it's an extended position, so I would maybe look for an undercut of this low. But if you look at something like GoDaddy, we haven't done anything with this, but here you have a pocket pivot breakout, and you actually had a pocket pivot in here, I believe, yeah, on this day, right here. Right here. That's this particular day would be right here. Maybe this one is one too. I have to check the volume levels. Maybe you check that, Dr. K. But a couple of pocket pivots before the breakout, and then you get the breakout here on this day, and you run up, you pull in, and down to the 28 line. Now you're setting up real tight along the 10-day line. So that doesn't look too bad. And that's sort of a cousin stock to Wix to some extent. Everybody hear me okay? Dr. K, you hear me okay, right?
Yeah, you're coming in fine.
All right. So let's see some other names. Have we had Fit on our list? Fit we thought was a sell.
We should take it off.
Yeah, there is some news about their sales of their flagship product weren't so great, and so the thing got tagged on that news. And um, it's sitting at the 59. Maybe this makes it, this is another one of these Teenage Mutant Ninja Ugly Ducklings, and it was looking pretty good up here, and then it got hit with this report yesterday, and it's back at the 50-day line. Maybe this is buyable on an extremely opportunistic basis. Who knows? That's a possibility. Let's see. Another one that comes to mind is this VIPS is pulling into the 10-day line. It had a pocket pivot off the bottom there. It's another one of these Teenage Mutant Ninja Ugly Ducklings. You can see sort of a inverted double head and shoulder, I don't know, but it's trying to come off the lows after getting waxed. Isn't that former darling stock that is doing okay now? We got about another 10 minutes. Any questions from anybody? I know some of these clouds are getting better. You see Workday trying to come out of this ugly pattern, but it continues moving higher. Now is also got a breakout here on above average volume, but nothing spectacular. The next day here on Wednesday, you got some volume, and now you're pulled back into the 10-day line, which brings it viable. So, makes it viable. So what you see here is another name sort of looking like a pod, a punch bowl of death, but it has been consolidating for a while, so I don't know, maybe it's going to push higher. But again, the pullback yesterday was, in a lot of stocks, was a viable pullback, and so it wasn't, the end of the world type of thing that it looked like, at least from an index point of view. So a lot of these patterns still remain intact, and you can see that. And I think that's really the message that you're getting right now from the individual stocks. So I wouldn't get all bearish right now. But I would just continue to operate on the basis of selling into extended strength and then buying on constructive weakness. Somebody's asking, does volume matter on the recoup of the low and an undercut and rally? No. All it needs to do is go above the prior low. Does it need to be higher by any measure? That's you're getting bogged down in the shakeout-plus-three baloney, and that's just, to me, a baloney rule. The best way to operate is to be willing, number one, to go back and forth with the stock if it doesn't initially work out, and then you use the prior low. So as I was pointing out with Lane, for example, when you undercut this low here, then that's 43.16. When it gets back above that low, you buy and you use 43.16 as your stop. And you do that, you may have to do that a couple of times before you get on board, and then it runs higher. So you have to be willing to move with the stock at least for a couple of days. Notice there's no real volume signature there. There's no big volume. So the whole shakeout-plus-three setup is just bunk. You can file it with high tight flags and all the other baloney that you'll hear from O'Neill style stuff. Neil should take in the shakeout-plus-three is derived from Livermore's shakeout-plus-three. But Livermore's rule, if you read in his book, How to Trade in Stocks, is much different than what O'Neill came up with. And statistically, if you study these patterns, the 3 points doesn't mean anything. A lot of times that can be the end of the move. You know what I mean? So it's very nebulous to me. And by the time, if you looked at this as a shakeout-plus-three, okay, you'd be buying here. So what's the low? 41.33. So when it got to 44.33, you'd be buying. So here's the stock getting up through 44.33, 3 points, and then what happens? Boom, it comes right in. So you'd be shaken out. You're better off just operating on the basis like here. You undercut this prior low, and it's 41.33, and you actually are able to rally back above it and close at 41.53 on the same day. So you actually could have entered there, and you're using that low as your stop, and then it comes right back up. Now you're in a good position to maybe play this second undercut and rally the same way. But it's just much, much more precise than the idea that you need, it has to go up a certain number of points or a certain percent. That's a bunch of baloney. And I don't think anybody over there at IBD has really studied this, at least not objectively, because what I see is completely different. And in terms of coming up with a concrete way to handle this as a trade, simply using that prior low as your entry and your exit if it doesn't work keeps things very tight, but also will put you in a position for a possible sharper move to the upside, which is exactly what we've seen in line over the last 2 weeks. So, you know, that's the way it works, and it's pretty simple. So you don't have to have a bunch of stupid rules in your head that don't mean anything. And, you know, like is the moon in the 7th house and Jupiter aligned with Mars and all this other BS. It's just a very simple trade, and it works. But you know, you have to be willing to come into it and maybe push out and then come back into it. And don't get too bogged down with the number of points it has to go up or the volume or anything. But you know, I'm going through a lot of examples and showing you how what I call the ugly duckling works in this market. When patterns don't look so good, they're actually setting up to turn higher. And if you're onto the types of setups that work in this regard, the ugly duckling setup, so the undercut and rally, the Louis sort of pattern, you know, tight action along a moving average either under or just above it, you know, prior, like we saw with Amazon was just above it, and I think EBIX was just below the 50-day. So, you know, that's pretty much how they work, and it's pretty straightforward. So anyways, that's all I've got. And you know, basically the message here is you've got your focus list to watch, and I think if the market's a little funky here, you probably watch and see where you might be able to come into stocks that you like and not get too freaked out by the index action or whatever you're seeing, because that's just volatile and very tough to handle. So I notice Ambarella is up $3.30, hopping and bopping. Look at that. I don't know, but it's a breakout, so that's where you sell it. Anyways, that's all I've got. You got anything else, Dr. K?
No, I'm good over here.
Okay. So anyways, we'll see how things play out. You know, we could be looking at something worse to come. I don't know. What's your take, Dr. K? You think the odds of more selling are likely, or are we just going to chop around? Because on the one hand, you have potential crisis among European banks led by Deutsche Bank. On the other hand, you have all of the central banks ready to do whatever it takes to liquefy everything and
Yeah,
keep
I think
it from happening.
we'll see maybe a mini tug-of-war ensue between the notion that the Deutsche Bank is unraveling and so are other European banks, because that's not the only bank that's in trouble. And that could create psychological fear in the marketplace, which would be exemplified by the VIX moving higher. Meanwhile, we know that the central banks are going to step in to rescue the day if needed. So yeah, I think, you know, we're either going to see some riptides ahead or a resumption of the uptrend, because the Deutsche Bank issue may really blow over.
Yeah, and so I think if you see stocks you like pulling into areas of support, and regardless of what the indexes might be doing, you can step in and just keep your stops very tight. Certainly without having to resort to a 7 to 8% stop. Hopefully the moving average is within 2 or 3, and you can keep things fairly tight. Don't take huge positions necessarily until things stabilize in here. But because I think right now you might be a little bit news oriented, but you know, I don't know. I won't get too fearful. If I can find something to be short and long at the same time, you know, find stocks that allow me to be short something and then long something else at the same time, and you're somewhat hedged, but you're operating in a bifurcated manner, and that can help psychologically. So, you know, one of my tricks is, like on a day like yesterday, if I'm trying to hold a stock that's moving well, like an umbrella or something, I'll just throw out a bunch of UVXY, and that worked yesterday. You know, to shield against that downdraft, especially when you're not seeing the particular stocks that you're trafficking in breaking down. And you didn't really see that yesterday, which I thought was interesting. So anyways, that's all we have. Oh, NTNX. Yeah, I got that up on my screen, but it's a new IPO, but it's the first day of trading, so is that it's not up here yet. I thought it started trading. Have they opened it up yet? It looks like I thought they were opening it up at, let's take a look. Let's go over here and do this. Our final act of the webinar. $14. I love it. Yeah, so this is a hot IPO to keep an eye on. So you don't have to jump on it right now. I think just keep an eye on it and see what shakes. So because I think a lot of these like Acacia and Twilio started out the same way, but they set up. So I think you guys definitely want to keep an eye on NTNX. That's going to be added to my buy watch list. So it already is actually. So that's all we've got, you guys. Thanks for showing up. We'll just see how this pans out. But keep it close to the vest. But operate on the basis of what your stocks are telling you. Now, if everything starts to break support and you're pushed out, you got to know where your out points are, and you operate on that basis as well. So don't let it all freak you out. Keep a level head. Don't get bullish. Don't get bearish. Just watch and see what the market's doing, because that's where your opportunities will arise, and usually when you least expect them and under conditions that don't always look so favorable. So anyways, that's all we've got. Thanks for showing up, you guys. We'll catch you next week. Have a great weekend.
So long.